Hi, so in this session we are going to be talking a few topics. The first one is going to be about Bitcoin, the crypto sector. Then we're going to be talking about the US regional banking crisis and how they're going to be intertwined. Is Bitcoin going to be an alternative to banking? Remember, on the 19th of May, I've got a fundamentals workshop which I'll be running, and then there's a massive workshop on options, those who want to learn options and trade options, on the 5th of June, and that'll be at 6 p.m. UK time, 1 p.m. New York time, will include live trading. All right, let's kick off. So crypto, wow, it's taken a hell of a rise over the last few years, especially since the pandemic. And let's focus mainly on the top main leaders, the flagship of the industry, which is Bitcoin and Ethereum. So Bitcoin being limited in the number of coins every 4 years halves. So the number of coins essentially is mathematically increased because you're halving the Bitcoin and therefore you're making more available. Now, what's likely to happen is as follows, is that Bitcoin being a now more integrated asset into the financial system, you've got ETFs like BlackRock, like Vanguard, like Invesco, like State Street are all pushing into Bitcoin. So allowing Joe Public to get more and more involved. So I see Bitcoin moving to well above 100,000 level near term. What is near term? By the end of 2024. That's what I call near term. Going into 2025, if the enthusiasm and the purchasing and the trading continues within Bitcoin, then what you're going to have it moving quite quickly up to 150,000. And over the next 3 to 4 years, you could see it at 250 or even 300,000. So I personally am a big fan. I didn't used to be a big fan of Bitcoin. I actually used to be pretty negative on Bitcoin. In the last rise, when it rose all the way up to 68,000, at that moment, this was already a couple of years ago, I said, sell Bitcoin, it's going down to 35. And of course, I got a lot of pushback on that. And a lot of people are saying, no, what you're talking about, you don't know what you're talking about. And it did drop down to 35. I said, it's going to 30. And I said, it's all the way going down to below 20. And it did. And from that moment onwards, it hasn't really stopped moving up. Bitcoin did sort of hover about a year and a half ago, did hover around the 30, 35 level, didn't really move, but I did say once it breaks above 30, this is already going back 8-9 months, once it breaks above 30, then it's going to go up and it's going to continue moving up, which it has. So where does it place it within the financial system? Well, Bitcoin is a highly speculative investment. It's a highly speculative trade, and a lot of traditional traders like myself, a lot of the old guys on Wall Street and across the banks are still not a massive fan of it because they don't see any substance to it. There's no real financial solidity behind Bitcoin. Therefore, they're nervous of it and they think it's just a fad that's going to fade away. However, because it's become more popular, and I mentioned earlier on, as the big investment companies set up the ETFs and it gets more integrated, you will see it become more and more a substantial part of the financial system. But it's not yet a safe haven. That's a big question now. It's got similar qualities to gold, which is a safe haven, but Bitcoin is not yet a safe haven. Bitcoin is still highly volatile, and if or when there is a sell-off in financial markets, and I think there will be a sell-off, and I think we're going to go for a 40% drop in financial markets. I think we're going to see a huge crash, which would be greater than 2008 and greater than 1929, which was the Great Depression. That's my view, because assets are massively overvalued. The question is, will Bitcoin hold its own, or will it end up being sold off? At this stage of its development, it'll probably end up being sold off if there was a financial crash today. The reason behind that is quite simple. It's not yet fully embedded in the financial system, and is still considered high risk, high volatility. So when there is a financial crash, there is a propensity to move to safe havens like gold, like the US dollar, which is still a safe haven today, and of course, like US treasuries, which are considered a safe haven. Also, the yen is considered safe haven, but we'll do a separate workshop on that alone, just on why the yen is a safe haven. But there are several safe havens to look at in the event of a crash. but Bitcoin is not yet a safe haven. However, as the dollar, which is a fiat currency, remember fiat is a Latin origin, which means an authorized currency, and fiat means that you've got confidence in the paper currency. So if that confidence falls away, then that fiat currency will fall away. So the Bitcoin is not fiat, it is crypto, and therefore there is a potential possibility that the crypto factor will replace the fiat currency. So in other words, as cryptos grow, it could have a position whereby cryptos end up replacing hard paper money, which is called fiat money. Now let's look at, as a continuation of this topic, into the US banking crisis. There is a US regional banking crisis. We can't avoid it. Doesn't matter what anyone says. They try to paper over it or put a band-aid on it or plaster. It's not going to work. It's a gaping wound. The US regional banks are in trouble. They have liquidity issues, and they've been heavily invested in bonds over the years, whereby the bonds were at a high price. Those price now of those bonds has trashed due to high inflation and high interest rates, and the US regional banks are in trouble. Remember, US Treasury notes or US bonds are as good as cash. So if a bank wants to park its excess money, they go and buy bonds. There has been recently, especially since March 2023, net withdrawals of money from the US regional banks, and that could be for a number of reasons. One of them is due to high inflation. When there's rising inflation, then the average consumer, the average retail individual, the average member of the public, what they'll do is they'll go and withdraw their savings, which were meant for a rainy day, in order to survive, in order to pay for food, rent, mortgage, car, gas, petrol, electricity, whatever the essentials are. So there's been a dwindling down of deposits within the US regional banking sector. Or it could be that those withdrawals have been made because of nervousness that the US regional banks are going to go bust. And in the US, what you do have is you've got the FDIC, the Federal Deposit Insurance Corporation, which essentially is a government-run body, has no money whatsoever, even though it's supposed to have, or intended to have, billions to bail out the banks in the event of a crisis. Then your deposits are secured up to a level of $250,000 US. So if you have more than that in a bank, then that could be at risk. So it all depends where your money's at and how much money you have within your deposit account at your US regional bank. Now, taking into account that there's money being withdrawn from the US regional banks, then they have a run on the banks, and that's going to cause further problems. But there's another side to the US regional banking crisis that maybe not everyone is paying attention to, and that is several things. Number one, late payments of rents by businesses to landlords is causing defaults of loans to rise. And the US regional banks are the main body that lends money to property owners. And those property owners, those landlords now effectively have to repay huge amounts of money back to the banks this year. Around about $929 billion of money has to be repaid back, and they don't have it. So who is going to end up forking out the money? The US Treasury, because the US regional banks are going to go bust because their clients, which are the commercial property owners, don't have the money due to vacant properties and late payments of their tenants not paying the rent. As a result of that, the US regional banks are now out of money, and therefore they're going to go bust. How does that integrate with cryptocurrency? Well, as more people lose confidence in the US regional banks or in the fiat and paper money sector, they're going to end up putting the money into cryptocurrency, which is safe, it's blockchained, and they're going to be deemed as a better, safer, no upper limit of deposits rather than a traditional bank. That is the next crisis that we're going to be seeing, a drain on US regional banks and a potential flow into cryptocurrency or rising in gold. You have to remember, I do run VIP mentorships, I run coaching, one-to-ones. You can decide what you want, you can contact me. I'm happy to incorporate you on the program. You can DM me, you can join my Instagram channel also. I've got books on Amazon on how to trade and how to work out better financial operations, all of that within the sphere of driving markets. But remember, the next workshop is on the 19th of May. After that, I've got a big options one on the 5th of June, interactive, learn to trade options. So join the courses, subscribe, comment, Catch you soon.